Let me...
Mine as well.
No, it should be working.
Okay.
There we go.
Brilliant.
Brilliant.
We're live?
Yep, we're live.
Fantastic. Right, go for it, Oonagh.
Welcome. Jazz handed.
Yeah.
Welcome back. This is our second broadcast of the day. The first one, we had a minor technical glitch with the Wi-Fi connection, so we're 5G at this time. So once again, welcome to Compliance Unfiltered, with your hosts Jean Blakeway and myself, Oonagh Berg. We are joined today by we've got a contingent of Northern Irish people, not even just Northern Irish people, all County Antrim.
Go us.
And go us. So we've got Ewan and Owen, and Oonagh. So really just strong Irish names here. And we can just talk about that for the rest of the session. But before we start and kick off, it would be wonderful if you would mind just introducing yourselves.
Eoin Kearns, Head of Compliance, Head of AML at Moonpay. I oversee our European compliance operations and regulatory engagements.
Lovely, thank you so much. Yeah, Evan, not you. Yep, my name is Evan McGuckin. I'm a senior manager at a company called FSCom. We are a governance, risk and compliance consultancy providing services to financial institutions across sort of the UK, EU and rest of the world. So lovely to join you both on this podcast today.
Yeah, welcome everybody. So we're actually, for those of you watching, we're in Frankfurt, obviously at the Transform Finance FinCrime Leaders Summit, and Owen is going to be presenting later at the event on the crypto panel this afternoon. That's right.
That's right, yeah. We've got a lot of exciting developments in terms of what TradFi is doing with crypto and what crypto is doing with TradFi. The worlds really are coming together. So it's good to get on with some of our industry peers and talk about that. So yeah, really excited.
Would you say that most of that work is on the institutional side, or are you also seeing retail engagement?
Both. Fundamentally, crypto, get to the bottom of it, it's all about financial freedom. That comes back to the individual.
Yeah.
So we really want to sort of expand that to everyone. So retail very much within our area of focus.
Fantastic.
Yeah.
Brilliant. So should we dive straight in and hear a little bit more about you, Eoin, perhaps starting with the snapshot of your current role at Moonpay, and maybe what excites you personally about you're working at the intersection of crypto and compliance.
Yeah, sure. So Moonpay Europe, one of the first MiCAR authorized crypto asset service providers. We're based in the Netherlands and we're supervised by the Dutch securities regulator, the AFM. So a lot of my day-to-day responsibilities going from 2024 was preparing the application. And what was exciting about that was that we were dealing with novel regulation, novel products, a novel industry in crypto, really stepping up. In addition to all the AML regulation, we are now looking at everything else, much like a MiFID firm, an e-money firm. We're subject to a level of supervision that maybe banks would have been privy to. So a lot of that engagement was 2024, and we were fortunate enough that all that hard work paid off, being one of the first to be authorized. So 2025 is really about walking the walk. We've made our commitments to the AFM. It's time now to operationalize. Going into H1 2025, we were one of the few CASPs out there that were actually operational across Europe, and so we were accountable, from a very early stage to meet the expectations of the AFM. So that's my day-to-day, really managing all those elements as we, continue to grow and innovate. So that's what I find most exciting. It's something new every day. There's a new challenge. There's a new opportunity. Like a SWOT analysis, I get new strengths and new weaknesses and new threats and new opportunities every day to really challenge myself on it. So that's what gets me up in the morning.
What do you think about the VARA approach to oversight? And I'm sorry if I'm kind of throwing that in there, because I know you were talking there about the AFM, but you talked there about operationalization, operational effectiveness, and what VARA have done in Dubai. They've actually staggered the rollout of the approved firms' capabilities so that they can gradually basically demonstrate effectiveness before they go fully, operational. And I think that's one of the things that's always concerning is, we can draft beautiful frameworks, but it's the operational effectiveness of those frameworks that it really comes down to. So again, I know, having myself as well worked in the crypto firms, going through the FCA and registrations as well, I'm fully familiar with the challenges. But going to the operational effectiveness, do you think the VARA model is something that other regulators should look at, or do you think that that is too restrictive?
It's a great question. I'm not an expert on VARA by any measure, but based on what you're telling me, the difference I see, or the challenge I would see with Europe, is that unlike the UAE, we're looking at 30 member states, that's 30 national regulators, and then there's oversight with ESMA there. That's why initially, or from the outset, MyCar was put in as a regulation. This is supposed to be across the board for everyone. And I think if you went down that staggered approach route, you would be getting away from that level playing field that we want to achieve. I would see it, for example, you would have Lithuania staggering differently than Spain, than Italy, etc.
Exactly.
I think for operational effectiveness, I mean, this is a simple approach. Everyone plays by the same rules. Here is the deadline. You're required to meet the deadline. That has responsibilities for NCAs. That has responsibilities for applicant firms as well. So that's how I see. So I'm in favor of going forward with this, this approach that the MyCar has taken, and I think, we're seeing some challenges. There's some adverse or downstream consequences we didn't think about, but that's an ever evolving nature of regulation, right?
Absolutely. Evan, did you want to?
Yeah, I was just going to maybe, because I'm not familiar with that approach in the UAE, is it? We work with a lot of prospective or hopeful firms as part of MLR's applications, registrations in the UK, as well as MiCAR sort of applications for authorizations in the EU. And I think we all know the challenge that firms have going through that with the supervisors and the regulators, having to have everything well designed in your policies and procedures, bring the staff in, pay the staff to the point that you're ready, willing, and able to provide those products and services on the day of authorization. So we do see a lot, unfortunately, pull out of that process as a result, and it can be quite difficult. Exactly, it's very expensive. It's very hard to sort of get through, and it can sometimes come to naught. So it's an interesting concept. It's an interesting case study. I'm definitely going to look into it a wee bit, because like design effectiveness is one thing, operational effectiveness is another. We do a lot of audits to sort of bring obviously a lot of that in, but like a sandbox type approach to sort of dip your toe into the regulated system sounds very interesting.
Yeah, I liked it. I can see how it can be restrictive, especially if firms just want to immediately get out there and get going. But it also, as well as it's a protection is a mechanism for the market as well.
Yep.
Because you get a real feel for the operational effectiveness. And I think with the advancements of technology, as we're still, learning much more about how the use cases of technology is being applied in our field, I think I like the approach, because it gives me a little bit more comfort as a regulator.
Yep.
But in the industry, I'd be like, I've just paid, and to be honest, these applications can go into the millions.
Oh, absolutely.
And getting ready, especially with independent verification and reviews and audits of the frameworks. So after spending that amount of money, you just want to start making money.
Well, this is it. And
in the money-making business.
and you sort of see it now too. You see a lot less applications, and you see a lot more changes in control, people buying licenses rather than going and getting authorized themselves. And that can present challenges at a sort of systemic level too. So
Finance FinCrime was a perfect example of that, where finance wasn't given UK approval, but then they wanted to use a third party for financial promotion.
Yes.
And the FCA said, no, that's not a conflict that you're going to use in order to bypass the registration.
Yeah, no.
So I think it's really important that we keep on top of that.
Absolutely.
So maybe back to Owen. So maybe back to basics on the question here, but core differences between traditional FIs and crypto. And then I guess the second part of that is, what's interesting for crypto and compliance coming together, and what can cryptos learn from FIs as well?
I think we could spend a long time talking about both differences and similarities. So maybe I'll just try to sum it up.
Yeah.
The way I see it is, with traditional finances, I think of banks, I think of EMIs, I think of big, large, trusted institutions that have operated historically. You talk about banks; some of them go back hundreds of years. The company I work for, Moonpay, we're 6 years old, going on 7, right? So we're very young and very new. We're picking it up, and we're operating in a space that's highly innovative. So we don't have that inbuilt trust. We don't have all those lessons learned from deep domain knowledge that you would get from a traditional firm. However, we're innovation focused. So as we're talking about here, the role of technology, it can make all our lives easier. If you're a financial crime fighter, makes your life easier. If you're a financial crime doer, it makes your life easier as well. We're on the cusp of that, so we can keep up a little more. And then I think like a big theme of today that I've picked up on is data and data integrity. Data for a company, a crypto asset service provider like Moonpay, it comes naturally to us. We want to be data driven. We want to make data driven decisions. So we've been wielding that as an advantage, as an edge for us to understand our customers, understand criminals out there. All of that is one of the big advantages I think that we have. Where I think with traditional finance, you're talking about masses of data that have been lying there for a while, and you're playing catch up. Again, it goes back to that sort of historical is a legacy approach. They have to play catch up, whereas we have the opportunity to be just a bit more nimble when it comes to figuring out what is the potential for the data that we sit on.
Yes, okay, fine. Which maybe leads us on to then the risk question. So traditional institutions are looking to adopt crypto. What are the top money laundering risks that traditional FI might have to consider then in that respect?
Yeah, I think they'd have, obviously, with any new product, service, customer base, etc., you have to find those differences. And the primary difference then is transactions being conducted on a blockchain. That works very different to the sort of master ledger traditional finance approach. Blockchain transactions are instantaneous. They are immutable. So financial crime can, if you don't plug that leak, they can happen. And once they do happen, then there's no going back. That's a permanent decision that's been made. And so I think traditional firms, when they look at onboarding crypto institutions, they need to really consider, what is that approach to blockchain analytics.
The one thing that always worried me somewhat was when I saw traditional, should I say, TradeFi compliance officers going into the crypto space, they tried to put, should I say, a circle in a square hole, or vice versa, in that we need to be tech driven in the digital asset space. The business is built on tech, it's from a technology standpoint. And so what I saw in many instances was kind of TradeFi compliance officers walking in and saying, "Oh, policy procedures." And actually, I one day, I remember just sitting there thinking, God, you have to start with the risk, and then you have to basically holistically. You talked about data lakes. I actually refer to them as cesspits in some instances, sewage lakes in some organizations. We have multiple sources of the truth across different risk elements as well. And one of the beautiful things about moving in to the digital asset space is that the engineers are the heart and soul of the business. And you can sit with them and explain the challenge. And by lunchtime, they'll come back to you with a solution. And it's mind blowing. But that's the one thing that needs to change mentally when you move over. It's working and understanding that the engineers are driving the business, and they need to be plugged in completely to the risk management system and how we're managing risk, because as you rightly pointed out, it is data driven, and we need the tech infrastructure to support that. And we should be automated to approximately 70% in an ideal world, with the SMEs then focused on where the real risks are being identified within the system. And that also means, in my personal opinion, removing the risk silos. We've got too many silos across the risk management framework. And that's what I've loved about stepping into an environment that initially wasn't regulated either, because you had to think from the risk, from the product, from the geographic exposure, industry, and then just map your risks across, inherently understanding the products. I think it's one of the most beautiful jobs to be in at the moment. I think it's so creative and exciting. You mentioned innovation earlier, and and you mentioned about the daily challenges, but it must excite you.
Evan, do you want to maybe?
Yeah, I was maybe just going to make a quick comment on that. I think in crypto, to your point, it was not regulated at one point, and that means there's a bit of a target on your back. And what does that drive? I'll get on my soapbox here, which is the sort of the differentiation between regulatory compliance and financial crime prevention. The crypto firms have a target on their back from the regulators, from the governments, to get things done right. So a lot of what we've seen working with sort of virtual asset service providers in a consultative basis is building incredibly strong tech systems, to your point, talking like dynamic risk scoring, really strong data points to be able to adequately and effectively mitigate the risk of their clients, their products, their services. You see that a little less in TradFi compared to some of the big crypto firms we work with, but it's outcomes based, it's sort of principles based rather than just tick box compliance. So I think you see that work quite well, sort of across crypto at the minute.
And that's what worries me, whether the TradFi will be able to play catch up in this regard.
Yeah.
Yes, we're beginning to see a lot of change at the front end, the customer facing, but in the back end, it's still a hamster and running in the wheel. It's still largely process paper based. And my concern is whether the first discussion today was, I don't know if you were in attendance, they were focused on AMLA and the future of compliance. And they were talking about, banks need to get on board with the shift in technology and the need for change. But that's a mammoth undertaking for organizations, tier one banks in particular, where you talked earlier about, fragmentation geographically with regulations, etc. If you're in a global firm and you're trying to roll out a new technology standpoint for risk management, we've all been there with global standards. This needs to plug into your operating day-to-day kind of CRM tool.
Yeah.
And it's a whole new ballgame with a massive cleanup exercise. And it was actually Jaap van der Molen, a conference I was at earlier this year, and he's leading actually that exercise at ABN AMRO in the Netherlands.
Okay.
And he was actually talking about this, that the exercise to clean up the data has to happen before we can entertain so where should we apply tech?
Yeah.
But the crypto firms have the advantage, and that's what excites me, because if you have the right person, for example yourself, leading the compliance function, we can actually have that innovation from day one.
You're very kind, first of all. Thank you. I'm blushing. I mean, the way I would maybe take, I wouldn't say a slightly more optimistic view, but I think having been in crypto so long, I can look out and say, I've got my challenges, the industry has its challenges, regulatory, innovation, all that stuff. I look at banks and I go, they have things we don't have. I go back to deep domain knowledge. They have the the legacy of knowing how to do things. They have resource. They have a lot of manpower. And I see, I would see the reaction of traditional banks to the ascent of fintechs, even before crypto, and how they were trying to manage that change. And we saw a melding of fintechs and banks. They all have apps. Some are good, some could be improved, but there is that melding of technology. And then now with in our industry, the advent of things like stable coins and the potential that they have with traditional finance coming in, I see it more as a melding. We take the advantages, we take the positives of both industries, and we collaborate then to make that sort of hybrid best of both worlds thing. I finished my response and I realized it's wildly optimistic, but I hold out hope.
We love optimism here. Definitely, yeah.
Do we have any insight on the AMLA supervision yet? Has there been any talk about which firms in the digital asset space maybe will fall under AMLA supervision?
Even if I did know, I don't think I could tell you. But to confirm, no, there's been no discussions as yet. I think our host for today said that AMLA's been up for 66 days.
Yeah, exactly.
So let's give them some time to understand the climate of AML across Europe. I'm not a betting person, but I think that might take a little bit of time. So the approach Moonpay takes is always open, transparent. We're willing to engage and collaborate with any regulator, be that in Europe, outside of Europe, and be that a supranational body like AMLA. We're open and welcoming of any developments going forward.
Well said.
Yeah,
You've
absolutely.
been trained well.
Thank you. And
Yeah.
shout out to the Moonpay PR department putting me through my paces.
Exactly. So, criminals and innovation. That was the other area we were going to talk about, I think, today. I know we've touched on some of this, but what are you going to do to mitigate this type of risk? And I think you were going to talk a little bit about blockchain monitoring as well in that regard. Step in, maybe Owen.
Yeah, this is a great area for both industry and the consulting industry to talk about. Like I said before, you've got an open blockchain that's instantaneous, it's immutable. So there is some threats there, but the opportunity is we get to see everything. In a like a theoretical example, if you did something by way of purchasing crypto today, someone at Moonpay would have the ability to trace the asset that you purchased in perpetuity. That's the level of transparency that that's available to us, and that need for monitoring has been picked up by great firms like Chainalysis, Unit 21, TRM Labs, great industry leaders, Merkle Science, so many. I was getting tongue-tied. So thanks for adding in. There's a host of great blockchain analytic tools. So the focus here is really on being the best, getting the best out of them to make those decisions, in terms of reporting to the FIU. And I think we're making, material progress in that area, because we see money laundering, terrorist financing, fraud, year-on-year decreases in the crypto industry. So that's like a real positive we're taking away. It's gone to the point now, if you look at terrorist financing, they're actively being discouraged from doing activities on the blockchain, because they know we'll eventually find them and report them and all that stuff.
Halal networks is still the 101 for it. But one of the things that you touched on there is also it's important to mention the likes of Chainalysis, TRM, because they're doing a lot of work in training government entities and working on investigations as well, some of which have been publicly announced in terms of their involvement in assisting law enforcement to identify and recover assets. And this information, I'm going to say it, public-private partnerships that we're seeing developing out of this is just phenomenal. It really is finally the true collaboration that we've been wanting to see between industry partners, vendors playing their role, in-house playing its role, and the public side playing its role as well.
Yep, very much. I couldn't agree more.
Yeah. Evan, was there anything you'd like to comment on?
No, I think broadly aligned with everything you covered there. Like the utility of the blockchain to give that visibility on what your customers are actually doing, what they have done, and what they do after your small part of the transaction is incredible. I always recall back in the early days of the dark web and Bitcoin first coming out, everybody was using Bitcoin to buy sort of illicit stuff. And then the Met Police comes out a few years later saying, fine, do it, use Bitcoin because we'll trace you. That was 10 years ago. Now it's sort of went so far and beyond what was the case back then. So information visibility is king. Yeah. You look at the likes of travel rule providers too, and how they can sort of bring in known wallets, wallet attribution to specific VASPs as well. So again, it's that sort of cross-industry availability of data, sort of a high tide sort of lifts all boats. So it's it's hopefully the future is bright.
So
Just before we finish up, obviously, you talked earlier about diversification of digital assets and usage. Sorry, the light keeps changing outside, so hopefully it doesn't affect the screen here. It's an interesting fact that, for example, Binance, only 5% of their revenue is actually made through the exchange trading.
Okay.
The other 95% is actually through the diversification of assets and use cases. You mentioned earlier, Moonpay also is working with different providers, institutional, retail, etc. That evolution, how are you finding the speed of that evolution? And also, and then aligning that to the risks that present themselves in terms of third-party risk, service provider risk, distribution channel risk, etc.
Yeah, in terms of the speed, it's breakneck. There is no getting around around that,
Yeah.
and that's actually one of the elements where regulation helps. It helps us catch our breath. Again, to the openness of collaborating with regulators, every new product and service, that is one of our conditions of having a MyCar license, that they know every step of the way. So we already have to come to them before we launch in the market, and we have to tell them how we've identified those risks and what we're doing about it. So it's part of the discipline and practice of living in the crypto world for so long. I mean, I'll be talking later. We're going into the DeFi world, which I think will be an interesting discussion. But I was thinking to myself that last year we were talking about NFTs and how they'd work with regulation, what something is like individually unique and what that means. Now we've moved on already.
Yeah.
No one's talking about NFTs. We're all talking about DeFi. And what does truly decentralized mean by way of regulation, by way of how it's applied in industry? So really it is just it's part of the discipline. It's working with great co-workers who are curious, engaged, and actually enthusiastic about crypto, wanting crypto to win, wanting Moonpay to win, wanting the industry to win. So yeah, we all kind of wake up with that smile on our face, getting ready to meet these challenges head on.
Without playing devil's advocate, doesn't regulation defeat the purpose of DeFi in that it's supposed to be self-regulated?
Yeah, I think that's just a matter of interpretation. That's one interpretation. Maybe some regulators would have a different interpretation.
I being a seasoned 20+ year, compliance legal professional, I love regulation is nothing more than common sense. It's not telling you anything magical. It's just basically reinforcing the standards that we should operate within for integrity within the markets and to maintain the integrity of the markets. But I suppose the true essence of digital assets, including Bitcoin, was that we would self-regulate amongst ourselves, but there will always be an actor that plays outside of the field. So regulation is important to create a harmonization across the players in the market and to prevent obviously damage to the market itself.
That's right. I completely agree with, that take. At the end of the day, we're not selling T-shirts. We're dealing with people's hard-earned money. Purpose of regulation fundamentally is protecting the consumer's interest and minimizing consumer harm. And another way to look at that maybe is regulation is there to hold people in my position or others within Moonpay to account. So the question ultimately then becomes, is there someone we can hold to account in the DeFi space? Or is there no one there to be held accountable? And it's really discussions around that, like who is actually involved in both the decision-making stakeholder side or perspective, as well as people who are just maintaining a decentralized platform, maintaining an aggregator, maintaining the smart contracts.
Yes.
What is that person ultimately doing? So we're looking, and we have to take their actions into account to understand whether or not there's something here to bring into regulation and to ultimately achieve that goal of minimizing consumer harm at the end of the day.
That was to my point on, distribution and service channel and third-party risk. I really do feel across both TradeFi and the digital asset space that they're the most overlooked risk areas. We focus primarily on geography, client, industry, and these three areas are so critical because the exposure that they bring us, and even secondary sanction exposure, is a challenge. I would love to see us doing more and focusing more on those areas because I think it's something generally as an entire industry, financial services industry, we didn't do it very well. But that's sorry.
Perfect. No, we're all good. No, good. Maybe just finishing with a sort of a human people side of things. I'll maybe start with you first, Eoin. So if you could give your younger self one piece of advice, or indeed the new younger generation who are coming into the crypto space, maybe to carve out a career, what would that be? And maybe Evan, you could think about that as well.
Yeah, I think we kind of talked about this as well last night over a beer. So maybe we've already philosophically been getting into it, but and I think one of the themes that we hit on was, curiosity and staying curious. And, I talk about how great it is to wake up and go work for Moonpay and go work in the crypto industry. What I'm not mentioning is reams of paperwork, ever-changing regulation. I mean, last count, MyCar was 500 pages, and there's 9 regulatory technical standards. That's all very, that's less glamorous stuff. There is this is compliance. It's a sort of a solemn pursuit in many ways, in addition to all the the cool stuff that goes with it. That day in, day out approach of being disciplined and earnest about reading and digesting and interpreting regulation, that's, if you're not curious enough, I think you get bored. Mm-hmm. So I think my advice really would be find something that you're curious to learn more about. It could be crypto, it could be, there's a wide variety of industries within finance. Whatever you find curious, I would go with that one.
Yep, I think couldn't agree more. Find your curiosity, maintain your passion, whatever that might be. Keep on top of all those changes, and remember why we do what we do as well. So if you're in industry, that has incredible benefits. If you're working as a consultant with firms, that has incredible societal benefits. If we get things right, or if we get things wrong, it can have serious negatives. So never forget why we do what we do when you get stuck in the day-to-day of doing what can sometimes be quite repetitive tasks here and there. So maintain your curiosity, maintain your passion, remember why. And that should sort of serve you right, I think.
It's great advice for all of us, I think. Yeah, absolutely. So yeah, I think that's a wrap now today. But thank you so much, Eoin and Evan.
Thank you.
And I'm sorry for calling you Ewan.
That's quite all right.
Well, it's been amazing, gentlemen. Thank you so much indeed. And thank you for asking the questions that you didn't necessarily want to answer.
I tried.
And a shout out to your PR team as well.
Yeah, they did a great job.
Brilliant. Thank you. Just warming up for